Hi there, welcome to Kneppy Invest and welcome to another three stocks on the ASX that release interesting or intriguing Appendix 4Cs or 5Bs for the June quarter 2025. I am recording this video on the 6th of August, intending to release it towards the end of September or maybe, worst case scenario, near the beginning of October. But I definitely want to release this video before these three companies release their next quarterly results. Now, I don't think these companies will change all that much since then or since I recorded this video, but the charts might look a little bit different. Okay, so three companies I'll be featuring in today's video are Spectur. Then we'll have a look at a company I've never looked at before, Parkway Corporate or something like that. And then we'll have a look at Strike Energy. Okay, so what I'm going to do is I'll briefly go through what these companies do. Then we'll have a look at the Appendix 4C or 5B for the quarter, then cash receipts history, and finally, we'll have a look at the chart. Okay, so let's turn our attention to Spectur, making communities safer, smarter, and more sustainable. Australia's smartest security, surveillance, and warning solutions. So when I think of this company, I just think of building sites who need to put fences around. And sometimes at building sites, you'll see these sort of long, tall, camera-like things. And that is what I think of Spectur. Yeah, exactly what I think. Sort of like that. That sort of thing you can see on their home page. So remote surveillance specialists. They protect communities, organizations, and critical infrastructure with intelligent, solar-powered security and warning systems that operate where traditional technologies fail in remote, unpowered, and challenging environments, like a building site. Yeah, building site. They deter crime, prevent illegal dumping, provide real-time insights, and deliver critical alerts. They also have, I'm pretty sure they might still have shark systems as well, where they tell swimmers, people at beaches, that there might be a shark or something like that. Here we go, shark warning systems. There we go. So they also do thermal monitoring, flood monitoring, security and surveillance, and emergency rescue beacons. So a little bit more involved than what I think of this company. Okay, so let's have a look at this company's Appendix 4C. And there was a nice little reaction from the market. A fairly small company, by the way. This company has a market cap of $5 million. So fairly small on the ASX. But just because it's small doesn't mean it's going to remain small. It could become a $500 million, $5 billion, $50 billion company in the future. I doubt it, but it could. It could. You never know. Okay, so let's have a look at this company's Appendix 4C and why the market was I wouldn't say in love with this particular Appendix 4C, but the market liked it. Now, they do separate their core report into cash flow and activity report. I will have a look at both. Now, this is actually the first time I've looked at these reports, but I did come away from looking at their Appendix 4C going, okay. So receipts almost at $3 million, a really good quarter for the company, particularly compared to the other three quarters. And the company was operating cash flow positive by $312,000 for the quarter. They're also positive for the year if you take into account government grants and tax incentives. So this company is very close to inflection point. Unfortunately for Spectur, they've been very close to this inflection point for a long, long time, for maybe 4 or 5 years. And on occasion, we'll see good quarters where they are operating cash flow positive, but you don't see a bunch of them together. So that's probably my one main issue when it comes to this particular company. And they're not growing their receipts or the revenue all that quickly. Cash on hand, a little bit of cash on hand, but not a lot, $1.08 million. And not much debt, if any debt at all, $261,000 of debt. In fact, this debt is for, looks like a vehicle. So it's a VW finance, an interest rate of 3.4% per annum and secured by motor vehicles. There you go. Although, no, according to this, Rating Finance provided $192,000 in funding secured against the company's R&D refund. There you go. Okay, so let's have a look at their commentary. They'll probably highlight that they were operating cash flow positive because if they'd not, they should hire me because that's the first thing I would mention. And they do. And straight away in the highlights section, the company achieved positive operating cash flow of $312,000 for the quarter and $263,000 for the financial year. including government grants and tax incentives. Receipts 2.98 million, up from 2.34 million in the previous corresponding period. They also mentioned, for some reason, payments for staff costs, administration, corporate costs were 1.05 million. I can see why they mentioned this, because it has decreased. These costs have decreased from 1.56 to 1.05. So obviously this company has gotten to this operating cash flow positive point from decreasing their costs and slightly increasing their receipts. I prefer a company to get to this particular point without any significant cost reductions. That is the ideal situation, that a company can hit this inflection point, not from reducing costs. That's just me. Okay, sometimes they will include charts like this. There's also another chart they used to include, I'm not sure if they've done it this time, where they will show you each quarter's operating cash flow, and then on occasion you'll see this quarter where they were operating cash flow. It looks like they have not included that in this particular quarter. Anyway, so they have in the past. Okay, so yeah, I suppose a good quarter from the company, particularly one of this size. Now onto the cash receipts history. Now I have been following this company for a while, since 2017, and there is a trend. Now I'll give it to this company, there is a trend in cash receipts. Receipts have been growing through time, from almost nothing, $400,000 to $3 million, and this was a record quarter. Now, the previous record quarter was December quarter 2023. So it took a while for this company to get back to another record quarter, but receipts are growing through time, and that's exactly what you want to see. But I'd like to see the receipts growing at a little bit quicker rate than this. But I suppose you get what you pay for, and this company is valued not much at all. Okay, now onto the chart for Spectur. And yeah, nothing much to look at here. Now, there was the pretty good day when they did release their quarter, which was on the 30th, and the share price on that particular day did rise by 25% on pretty big volume. That volume has maintained, not that high, but we have seen some high volume coming in the last few days after they released their Appendix 4C. And the share price has remained a little bit elevated. Share price did get down to 1 cent back in April. So there is indications that there is a little bit of liquidity issues with this company. So maybe a good quarter, or this good quarter, could raise the liquidity, maybe a little bit. But as I mentioned before, on occasion, this company does release a good quarter where they are operating cash flow positive, but it doesn't stick. And that's why the share price or the chart of this company over the long term looks like that. It's horrible, pretty bad. Share price has been going down ever since they listed, really. And I'd say at this point in time, no end in sight, even though this was a good quarter, because I would say more than likely the next quarter will disappoint. Okay, so that is Spectur, ticker code SP3, a fairly small company on the ASX, but operating cash flow positive. Now on to Parkway Process Solutions. This company does release Appendix 5Bs, which is a mining company. So for some reason, I thought this company was a mining company. Parkway Corporate. In fact, they were called Parkway Minerals at one point. So they must have done a backdoor listing or something. And you can see quality activities, Appendix 5B, cash flow report. So whenever I see an Appendix 5B, I think mining company. Whenever I think or see an Appendix 4C, I think non-mining company. That is the way I do it. But Parkway Corporate is not a mining company. In fact, as I said, this is the first time I've looked at it. This is a water and wastewater treatment company. And there's actually quite a few of these companies on the ASX. Yes, quite a few. In fact, I talked about one, Demem. That's one. SciDev is another one. And there's probably a few other ones I can't think of right now. Anyway, they provide, according to the website, innovative water treatment services to solve difficult water challenges sustainably. They have quite a few services here: integrated water treatment solutions, analytical testing, project evaluation, so on and so forth. A few solutions here: product-based solutions, industry-based solutions, next-gen solutions, integrated water treatment solutions, and massive amount of products. I won't go through all of these because this video will be 5 hours long. So a massive amount of products, including analytical instruments, laboratory equipment, what else? Pipe, hose and fittings, valves and solenoids, water treatment chemicals, tank range, filters and membranes, etc., etc. So a lot going on in this company. So it's really interesting to look at the company for the first time. And that's what I'm doing here. And I got a completely different company than what I thought. Because again, I thought this was mining. I thought this was a mining company. Okay. So that's that. Now on to the company's Appendix 5B. Okay, by the way, the share price is 1 cent. So that immediately is a little bit of red flag, but it's not small because they have a lot of shares on issue. So Parkway Corporate, $40 million market, $30.44 million market with about 3 billion shares on issue. So it wouldn't be surprising if this company, say even on market index, they say basic minerals, and in fact, they have a logo, Parkway Minerals. I have a feeling this company did a backdoor listing or they bought the main component of this company now, sometime in the past. That's what I would guess. I could go back through the announcements and see when they did it, but I won't do that because that will take a little bit of time. Anyway, so share price 1 cent. I'd like to see the company do a share consolidation because as soon as I see a share price of a company this low, forget it. Particularly below 1 cent, it's not for me because it's just pip traders. That's it, pip traders. But if the company can start to release really good quarters, continuing to release really good quarters, like this quarter, maybe share price will get to say 2 cents, and then I'll become a little bit more interested in the company. Okay, so let's have a look at their Appendix 5B for that quarter. All right, so there was a lot in this. There was a lot of commentary. In fact, 16 pages, not of commentary, but the whole document was 16 pages. So let's have a look at why I've included this company in this particular Appendix 4C. So the real stuff, the relevant stuff starts on page 12. Receipts, 3.9 million, and the company operating cash flow positive, 869,000. Now for the year, they're also operating cash flow positive, 929,000. So it looks like this was a pretty good quarter. And if you look at the receipts for the quarter compared to the year, this was a good quarter on that basis as well. Okay, so were they free cash flow positive? Yes, they were. Not a lot of capital expenditure. In fact, they were, if you don't include other non-current assets, they were free cash flow positive for the year as well. Cash on hand, it's nice at 2.58 million and no debt. No, they do have debt. $1 million of debt with $3 million of unused financing facilities. Term loan facility provided by Causeway. Interest rate is higher of BBSW. Don't ask me what that is. Bill Bank Swap Rate. Something like that. BBSW. Bill Bank Swap Rate. BBSW. Bill Bank Swap Rate or something like that. Bank bill swap rate. I was so close. So close. I knew it was, I got the words right at least. Anyway, so bank bill swap rate sort of makes sense. Bank bill, then bill bank. Okay, plus 8%. Ooh, that could be 11%. Maturity date, 17th of June. That's only $1 million. Okay, so let's have a look at their commentary. A lot here. So talking about in the highlights section, increasing quarterly operating revenue, 4.22 million, continued growth in profitability with EBITDA at 0.47 million, preliminary result, 1.52 million in EBITDA, awarded a massive contract, 12.85 million contract by a major project contractor, and some other stuff as well. Talking about brine management and large brine. So maybe they're really focused on brine. Okay, so operations, technology, corporate, introduction to the company. So they do go on a fair bit here. Talking about different divisions. For instance, what's that one? Industrial Operations Division, Industrial Technology Division, brine management solutions, etc., etc. Corporate operating revenue. So revenue has really increased over the last few years. What's this one? EBITDA, operating revenues, and operating cash flow. So it's sort of a very simplistic chart, that one. And also looking at the revenue outlook, EBITDA, cash flow, R&D, rebate. So a lot of stuff here for shareholders. And they also look at or talk about the term loan facility. Okay, actually, I just want to see what they say in the about section. See if it's a little bit different. They are a leading Australian water and wastewater treatment and process technology company focused on the commercialization of a portfolio of innovative process technologies in key industrial markets. Okay, so that's that. Now on to the cash receipts history. Is this company growing? I think they are. I've got to go the right direction here. Here we go. Okay. So there's a massive jump in receipts in 1 year ago in the June quarter. I'm wondering if it was an acquisition. It's just jumped up massively in one quarter. And sometimes when you see that, not all the time, but sometimes when you see this massive jump like that, it's because of an acquisition. Now, since then, the receipts have actually gone down. Have gone down. And before that, receipts were slowly growing, but nothing too significant there. Okay, so I'd like to see or find out why there was that massive jump in receipts in the June quarter 2024. Now, we could see it. I could look at right now. All we have to do is go back 2 years. ComSec, go back to the June quarter. In fact, I'm going to just have a quick look. Looks like they did acquire something in March 2024, Tank Weld Group. And if we open up their June quarter results, oh, significant brine technology breakthrough. 4th of September. There you go. We'll just have a quick look if it opens up in ComSec. Of course, ComSec takes ages. Some of the announcements sometimes take 5 years to open up. I'm not joking. Yes, I am joking, but it seems like they take 5 years. In Market Index, this will be opened up in a split second. I'm pretty sure it's a ComSec site. And a fairly similar looking Appendix 4C, by the way, or 5B, I should say, to the one we saw there, or saw this particular quarter. Why was there a jump in revenue or receipts? Yeah, there's just too much here. It seems like this is something they do every single quarter. Yeah, they mentioned a 310% increase in revenue. Oh, yeah, okay. More than double financial 23, highlighting the ongoing growth of Parkway, particularly since the acquisition of a Tankweld. Well, maybe because you acquired Tankweld and that was a nice little boost or gave a nice little boost to revenue. Okay, so that's the cash receipts history for Parkway. Now let's have a look at the chart. The chart more than likely won't be looking any good because where the share price is at 1 cent. And yeah, nothing to change my opinion. Although the share price was much lower 1 year ago at 0.7 cents, but nothing really to like here with Parkway Corporate. Not my favorite chart at all. In fact, if you have a look at the weekly chart, I don't think it's going to look good either. Its share price just going sideways. Now, in saying that, share price going sideways for a while. Share price was as low as 0.3 cents back in 2019. So share price has been going sideways for a while, 4 or 5 years. So when it does break out, ooh, it could be a nice breakout for Parkway. Okay, now on to Strike Energy, another company I've never looked at in the past, but this company is in production. Powering progress for the energy transition. Strike Energy aspires to be the lowest cost onshore energy producer in Australia. Well, good luck with that one. I'm pretty sure all energy companies aspire to be that. I'm pretty sure. Anyway, so they do have a few projects here. Perth Basin, Whalering, South Erregulla Gas, South Erregulla Peaking Power Plant, West Erregulla Gas, and the Precinct. Pretty sure this company was in the news not long ago because of acquisitions or something. Acquisitions, got to do it right. STX is a TIG code. And by the way, the market cap of this company is, I actually have no idea, 200 million? 379.26 million with 3.3 billion shares on issue. There you go. Okay, so I'm pretty sure this company was in the news a few years ago because acquisition or something. I can't remember if they're acquiring something or something like that, or someone was trying to acquire them. I can't remember. I'm trying to remember how far back it was. And I'm going a fair way back. I am going a long, long way back. Okay, so I think we can move on. They are talking about an acquisition here, but I'm pretty sure there was way more. Oh, there we go. Strike's acquisition of Talon becomes effective. This was in 2023. Was it really that long ago? Anyway, I'm not sure that was it because I saw a lot of announcements in regards to an acquisition. Anyway, let's have a look. By the way, share price up 6.36% today. Maybe nice. Although the share price is nearer the 52-week low than the 52-week high. Okay, the first thing I noticed when I have a look at this Appendix 5B, because it is a mining company, is they mention strategic review. And whenever I think strategic review, for me, that means the company has not been doing well. Now, when I have a look at this particular Appendix 5B, I was like, ooh, initially it looked really good. So $11.9 million in operating cash flow on only $18.8 million of receipts. I was like, oh, that's actually not that bad. Nice little margins there. For the year, $40.9 million in operating cash flow on $74 million of receipts. I was thinking, wow, that's not that bad. Why is this the first time I've had a look at this company? Well, we know because I'm doing a series. Okay, but if you go to section 2, they spent a lot of money in exploration, evaluation, oil and gas assets. For the year combined, those two cost $84 million. So this company is bleeding cash because of those two things. Now, I'm not even going to say those are one-offs because it looks like exploration and evaluation, they've pulled back in the last quarter, but oil and gas assets, it seems like it's about $16 million every single quarter because of the year. Okay, so they're still burning through cash. Based off Section 3, financing activities, they are borrowing money. So borrowings have been increasing. Don't really care about cash on hand because they've increased cash on hand because of borrowings. And if we go to Section 7, they have $79.911 million in debt with $35 million of unused financing facilities. You can have a look at the particulars of financing facilities. For instance, Macquarie Bank Tranche A1, $60 million secure facility with interest rates of 6% margin plus bank bill swap rates. There we go. And maturing 31st of October 2026. And they also have a Rabo Bank facility, 3.25% plus BBSW. All right, so yeah, initially I was like, oh, not bad. But then, yeah, cash flows from investing activities, a fair bit of money spent there. So they need to be a little bit more operating cash flow positive for them to be free cash flow positive, even though the definition of free cash flow is operating cash flow minus capital expenditure, and that's fairly low, but they're still burning through cash. And then I had a look at the highlights section, and straight away they talk about strategic review. So strategic review completed, and they really want to generate returns for their shareholders because they mentioned, or the CEO mentions, Peter Stokes, with the strategic review now complete, it's now not complete. It's complete. I was going to say not complete. I think I said that, but it's now complete. The company has a clear roadmap to unlock value across our unique Perth Basin asset base. The recent strategic investment by Carnarvon Energy, funny enough, Carnarvon Energy is not in production. It's an exploration company. Provides a strong endorsement of our strategy. Well, maybe not. They might just think you're cheap. And strengthens our ability to execute. So Carnarvon Energy gave him some money, which I'm not sure how or why, because again, Carnarvon Energy is not in production, so they need money for themselves. Or maybe they've given up on what they're trying to do. Anyway, their integrated gas and power model positions Strike to capture high margin opportunities while ensuring energy security for the state. We enter financial year 26 with strong momentum, a robust balance sheet, and renewed focus on disciplined delivery. Not sure you could call it robust balance sheet, but that's just me. They have a bit of debt. Okay, production metrics, all that sort of thing, whatever. Okay, so this is a mining company. Now, let's have a look at the cash receipts history. And there was one thing that struck me about Strike. Yes, I said that intentionally. About their Appendix 5B or cash receipts history. It's that it hasn't really gone anywhere. Ooh, what am I doing right here? Let's do something different. I'm going to increase the gap width. No, decrease the gap width. That should, there we go, look at that, beautiful. One thing I noticed about this, looks like they might have gone into production back in 2024. Production went up nicely, or the cash receipts went up nicely to 21.94 million. And the cash receipts have been going sideways ever since, right on between 18 million and 19 million. So 5 quarters in a row where cash receipts are at that level. Okay, so nothing much to gain from cash receipts for Strike Energy. And what about the chart? I have a feeling this chart's not going to look good because the share price is near the 52-week low. Okay, Strike Energy chart. The weekly chart. Ooh, share price really collapsed back in February 2024. Must have been results, huh? Share price fell 31% and then 26% in consecutive weeks. Share price went from 44 cents down to 22 cents. Yes. In fact, I put a sort of a support line there and it fell straight through that. In fact, this is an ugly looking weekly chart. So maybe that's one of the reasons why they did a strategic review. Maybe it was because the results in February 2024 were terrible. Anyway, so daily chart is going to look bad as well. Yes, I have no interest in this company just now. when I might become interested when I see a chart like this, so you can see the share price going sideways between September and January. That's when I become a little bit more interested in the company, but I want to see a breakout. And unfortunately for Strike Energy, the breakout was to the downside, and the share price has actually fallen. In fact, the share price has halved since then. So no interest in Strike Energy for me. Okay, that's it for this particular look at 3 companies that release interesting or intriguing Appendix 4Cs or 5Bs, Spectur, Parkway Corporate, or Process Solutions, or something like that, and Strike Energy. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your financial needs. That's it for this video. Have a good day. Bye.